Hello traders and investors, welcome to your weekly market update for September 1st to 5th, 2025. And today we'll break down the key events, earnings, and opportunities shaping global markets this week. September is here, and historically it's the weakest month for equities, with the S&P 500 averaging a minus 1% return since 1950. This week, markets face seasonal headwinds and recession signals, policy uncertainty, but also rate cut expectations, with traders pricing in almost 100% chance of a 25 basis point cut from the Fed. At the same time, we're seeing rotations into small caps, weakness in tech, and a softer US dollar as bond yields ease. At the same time, we're seeing rotations into small caps, weakness in tech, and a softer US dollar as bond yields ease. Let's go day by day. Monday, September 1st, US markets closed for Labor Day. Key data: UK house prices, Eurozone unemployment, and China's ISM Manufacturing PMI. Tuesday, September 2nd, all eyes on the US ISM Manufacturing PMI, expected at 47.5, plus Eurozone inflation and the Reserve Bank of Australia's rate decision. Wednesday, September 3rd, US JOLTS job openings and factory orders, Australia GDP, and China's Services PMI. Thursday, September 4th, US ADP payrolls and jobless claims, plus the ISM Services PMI and the Fed Beige Book. Friday, September 5th, the big one, US Nonfarm Payrolls. Markets expect 160,000 new jobs and an unemployment rate of 4.2%. Canada jobs and Eurozone GDP also hit the tapes. Friday's data will be critical. It could determine the Fed's next move and spark major volatility. Earnings are winding down, but some heavy hitters remain. Tuesday, Zscaler and GitLab. Wednesday, CrowdStrike, Dollar Tree, HP Enterprise, and Hormel Foods. Thursday, Broadcom, Lululemon, DocuSign, UiPath, and Rent the Runway. Friday, Brady Corp. The spotlight is on Broadcom's AI chip demand, Lululemon's consumer spending strength, and CrowdStrike's recovery after cyber incidents. US indices closed last week slightly higher, Dow up 0.17%, Nasdaq 0.49%, S&P 0.24%. Year-to-date gains are still strong, but September risks a pullback. Key risks: overvaluation, tariffs, and Fed lag. Opportunities: small caps and value stocks. Globally, India's Nifty and Bank Nifty remain sideways. A breakout could be brewing. In Forex, the US dollar looks weaker as Fed cuts loom. EUR USD, bullish trend, could target 1.20 plus. GBP USD, range bound, but dips look attractive. USD JPY, likely to fade near 147.148 if yields cool. AUD USD, watch for moves tied to China's PMI data. Expect big swings Friday with NFP. Commodities are mixed. Gold holding near highs, support at 3,365 work, or potential rebound to 3,145 if the dollar weakens. Oil. Brent forecast $74 per barrel on oversupply concerns. OPEC plus decisions could shift prices. Copper and green metals. Demand strong from the global transition. Agri-commodities. Wheat and coffee volatile on weather risks. Strategy: buy gold on dips, stay cautious on oil. Crypto traders brace for volatility. Bitcoin is flat around 113K, but history warns of red September with average 5% losses. Watch out for a possible mid-month spike toward 150K, but also risk of a drop below 100K. Ethereum could rebound to $5,145 if ETF inflows stay strong. Institutional adoption continues, but risks remain. For now, BTC 103K support is key. So to recap, expect choppy September trading, big volatility around jobs data, and opportunities in small caps, EUR, USD, and gold. Stay disciplined, stay informed, and trade smart. I'm Rajwinder Danda the Great. Let's make 2025 the year of your financial success.